Hi guys, today I'm with Jakob from Clearpool and we're going to dive into the latest update on Avalanche. Jakob, can you tell me a bit about yourself and about Clearpool, please?
Sure. Thanks for having me. So my name is Jakob and I'm Italian originally, but I live in Hong Kong since about 8.5 years. And my background, unlike most people in DeFi, my background is actually in startups. I helped build several larger consumer marketplaces across Asia. Really starting from a small company all the way to IPO. And then later I was in fintech. I was in alternative lending. So we did actually all sort of lending solutions across Southeast Asia, places like Thailand, Indonesia, Vietnam. And we would, go and sort of provide lending solution to everyone that was not covered by banks. So small SMEs, all from like startups to, small online sellers, shops in Indonesia. And that is actually, I think I was involved in crypto, already in 2017. I started buying. No, I was not really involved. Unfortunately, I was not an OG. So I just started buying some Bitcoin and Ethereum right at the top. And then I lost a little bit of interest again in the industry. But then, as DeFi came up, especially with the first, lending protocols, mainly like Compound, Aave, Maker, that was in 2020, DeFi summer, that sparked my interest again, right? Because I was doing, alternative lending, and then I was seeing, what was going on in DeFi, and that is what brought me back, into becoming a very passionate crypto guy. I looked more and more into DeFi. I started doing, all the DeFi yield farming, DeFi summer, all that fun stuff. And at some point, I just realized I spent more time doing that kind of stuff than at my regular job. And that's when I realized I wanted to get into crypto full time. And exactly, we were looking at the sort of DeFi OG platforms like Compound, Aave, Maker, which are obviously great platforms, over collateralized lending. And we realized that, we thought there was an opportunity. There was an opportunity to actually do sort of like credit, private credit. And this is what Clearpool is. Basically, Clearpool is a DeFi protocol for private credit. So while, Compound, Aave, Maker, those are all fully DeFi, permissionless platforms that work on the basis of on-chain over-collateralization. So, for everyone who doesn't know, you need to provide more of an asset like Bitcoin in order to take a smaller amount of loan. And if that, if your collateral, decreases in price, then basically that position your collateral gets liquidated and lender getting back their money, right? So it's fully safe and you don't need to trust anyone. You don't need to care who's on the other side. So that works really well, but it is a little bit, I guess, limiting to some extent, right? It's very capital inefficient. And there's a lot of companies, especially institutions, that maybe do not have that on-chain collateral, to take on a loan. And this is why what we do is we basically have replaced that on-chain collateral with a couple of things. We're doing credit risk assessment. So we're looking into the creditworthiness of the counterparties. There's legal agreements in place. And we're also looking at other risk mitigation factors like securing those loans with receivables, etc. So Clearpool is a DeFi protocol for institutional lending. So we don't give loans to individuals, but it's actually companies that are doing a credit risk assessment, signing agreements, and then are able to open pools on Clearpool, and then those pools can be funded by anywhere in DeFi.
Were you the first to do that?
We were among the first to do that. Other notable players, I guess, were the likes of Maple Finance, TrueFi, and then on the RWA sort of fintech side, guys like Centrifuge and Goldfinch and those type of players. Yeah, with Clearpool we are live since 2.5 years nearly, and so far we've originated roughly $500 million in loans.
Congratulations!
So we're like one of the larger players, the largest players in that particular segment.
Right, that's awesome. Okay, so now focusing more on your most recent update. So what was the inspiration behind your credit vaults on Avalanche, and how did it enhance the lending efficiency compared to the traditional methods?
Yeah, Yeah, maybe something about our first product and sort of flagship product. We call it the permissionless dynamic lending pools. So the main unique feature of those lending pools is that they were, highly liquid compared to, all the other sort of like RWA private credit lending pools out there where there's always lockups. So we created a pool where, basically there was a utilization curve and lenders, the unique feature was lenders could withdraw at any point in time. And then if lenders would withdraw, interest rate would shoot up for borrowers, they would repay quite quickly. And this system would always guarantee that there is some liquidity within those pools. And this worked really well, but it mainly only worked for trading firms because trading firms are obviously highly liquid as long as they're solvent. If they need to repay, they can just unwind the position and repay quite quickly. Now we realized that was a bit of a limiting factor when it comes to other type of borrowers, because other type of borrowers they might need slightly more sticky liquidity and also more predictability in terms of rates, so fixed rates. But at the same time, we realized that when it comes to DeFi, long lockups weren't really well perceived and it was extremely difficult to raise liquidity with long tenor lending pools. I feel like DeFi is a little bit allergic to long lockups, right?
Very allergic.
Compared to sort of more traditional capital. And this is why we launched these credit vaults. With credit vaults, borrowers, they can set up their own terms, their own interest rates.
Nice.
They can also put parameters such as repayment windows and minimum notification periods, and what this resulted in was that we had new kind of borrowers, borrowers such as fintech firms or prime brokers, but at the same time we still focused on borrowers that could manage relatively short repayment cycles, and this is why. Now we're very happy with this, with the first, credit vault that we launched on AVEX. We have a borrower called Banksa. They're actually a payment company. They're in the business of on and off ramping to exchanges. And basically they need capital to finance the time it takes for the bank to settle into their account, which is like, 2 to 4 days or 5 days on a long weekend.
Oh wow,
and,
that's awesome.
Yeah, and by doing that, basically what we have is an opportunity that is providing real yield, non-crypto related yield by a fintech, by a payment company, while at the same time they also have very short repayment cycles. So as a lender, I can get back my capital, my funds in as little as 5 days. Now, I think the other interesting piece is this also works really well for trading firms. And once again, because previously we always had to have some idle liquidity in the pools to facilitate withdrawals, this is now being replaced to having short repayment windows, let's say every 3 days.
Oh, wow.
So for lenders, once again, they cannot get their capital back immediately, but they maybe need to wait for a couple of days. But at the same time, they're compensated with a higher interest rate because now the utilization rate of those pools is 100%. Now, what inspired us to do this on Avalanche? I think, as I mentioned, previously we mainly worked with trading firms, and now we're moving towards other type of borrowers. Might still be crypto-related companies such as prime brokers. They require a little bit more sticky liquidity, or it might be fintechs, especially fintechs with short-term capital needs to start with, and I think Avalanche really really became one of the ecosystems that placed a big focus on RWA, right? I think they pioneered one of the largest initiatives for RWAs in the crypto space. They also have an ecosystem fund that I think is $50 million that is just dedicated to RWA liquidity provision opportunities. And when we met the team, we immediately realized that we were very, very much aligned with that ecosystem. And then obviously also, when we look at, what ecosystems do we work with, there need to be a few things in place in order for us to be comfortable to work with an ecosystem. First of all, it got to be a battle-tested ecosystem, right? So it has to have significant amount of liquidity, and our lenders and borrowers, which are very often institutions, they need to trust that ecosystem. Then it has to have good, on and off ramping solutions. So Avalanche obviously is well integrated with, all the different providers such as Circle or all the different exchanges. It has, a lot of liquidity on the bridges, etc., etc. So those are the things we look out for. And now, obviously, originally we started with Ethereum. So Avalanche obviously represents a ideal solution. It's EVM compatible, and it's a lot more efficient in terms of costs, because Ethereum really is at a stage where, unless you're moving really big amounts, it really is very painful in terms of costs. Even if you're moving big amounts, it's a bit painful. So with Avalanche, and with this new product that we think is a private credit RWA opportunity, but has the feel of DeFi, we hope that we can attract a lot of smaller lenders as well, that maybe aren't doing massive tickets but do want to participate in this type of lending opportunities.
Awesome. All right. So we have heard that Clearpool has on board many high-profile borrower types of clients, such as like Jane Street, the big Wall Street giant. So can you tell us a bit more about who has been using your product and services, and which kind of like user profile are involved with the protocol?
Yeah. So we are obviously a institutional lending protocol, meaning that on the borrowing side, it is always institutions. Now, what does institutions mean? Sometimes I think people always think of BlackRock immediately, right? when the word institutions falls. Now, for us, the counterparties we work for is so far has been mainly crypto trading firms. There, we work with the likes of Wintermute, Fazanara, and similar other companies. A lot of the larger crypto native trading firms, high frequency trading firms, doing arbitrage market risk neutral strategies mainly. Now, we found this to be a ideal sort of like counterparty, because that worked also really well with our product. As I mentioned before, we have this product that has very quick and fast liquidity for lenders. They can withdraw immediately and borrowers can repay quickly. And that worked really well for those type of counterparties, also because they're very companies that they can act very quickly and can repay very quickly. Sometimes it's not even that large firms, so approvals are relatively quick, etc. Now, at some point we did realize that there was actually also interest from larger type of borrowers, and we really talked with a lot of the leading trading firms, also TradFi trading companies. The largest one that opened a pool on Clearpool was Jane Street, and then also recently we opened a pool with Flow Traders, another publicly listed trading firm based out of Europe. And currently, actually, we're in touch with a lot of, I would say, similar companies that are very, very interested to raise liquidity via DeFi.
And most of them like based in Europe, or?
I would say they are across the globe, basically, right? So we work with players like Jane Street that are, coming from the US, originally European players, and I think a lot of them actually in Asia as well, right? We're also based in Hong Kong, so a lot of them were based out of maybe Hong Kong or Singapore. Now, because of this, I would say more institutional borrower type, we realized that they had a little bit different needs. They required a different protocol. This is why we also developed a new protocol called Clearpool Prime. So Clearpool Prime is an institutional grade, lending product where everything is permissioned, so everyone is being KYC'd, AML checked, and the platform works that the borrowers can choose what type of lenders they want to face. They can set their own rates, and then lenders can choose to lend to them via this permissioned and a little bit more discreet environment, everything on crypto rails. Recently, we started venturing out into new type of borrowers, mainly fintechs. And I think, as I mentioned, this is I think we realized that I would say the industry or lenders in the industry, they like this type of exposure, right? They like this type of exposure. We also, very often this type of deals are secured by some sort of receivables. Interest rates are attractive in a high interest rate environment. We're talking about like 15% plus. But very often we realized that lenders were a little bit allergic to long lockups, as I mentioned, right? They didn't really like the long lockups. They wanted to have more flexibility in terms of capital, in terms of like withdrawing their capital. And this is why for the fintechs, what we started to work with is payment firms. Could be remittance companies or companies doing on and off ramping on exchanges, these kind of companies. And what characterizes them is that they have very short-term financing needs in order to sort of like finance the bank settlement time. So this is why we started off with these type of fintechs. Another sector that we're currently looking at that is very attractive, also in terms of I would say credit worthiness and returns, are prime brokers, right? So prime brokers obviously need to provide liquidity to their clients, but this is obviously also over collateralized. The clients that trade with prime brokers, they need to provide collateral, and they are looking at us as another source of actually sourcing that type of liquidity.
I see.
So that's a new type of borrowers that we are also looking at.
Okay. Since you guys are serving many institutional stakeholders, how does Clearpool helps with the underwriting and like assessing credit worthiness of like these different stakeholders?
Yeah, so here I think it is to point out that Clearpool is primarily just a infrastructure product, like a marketplace. And as such, we are not doing the underwriting and credit risk assessment ourselves. However, we do work with third parties that are helping in providing this service. The main one is a company called Credora. They are, I guess, they are the leader in the credit risk assessment space in the crypto industry, and they assess this type of players, usually not just by looking at financial statements and doing traditional due diligence, but they also have real-time risk assessment piece. So basically, these borrowers, trading firms, they need to provide they read-only API keys from the different venues they trade with, or maybe they need to connect their custody accounts, and then basically Credora has visibility in real time of how many assets this company have across all the different venues, and they're looking into other type of real time data in order to see whether there's any changes that are critical, and based on that, they're also able to provide ratings that are more or less real time and adjust to actual real time data.
I see.
For example, for the new loan we have with Banksas, a fintech loan, we actually have another partner they call Coris. They are a credit fund, and they serve as the servicer to the loan. So they sort of like help to the risk assessment and also put some structure in place. So next to for example, there when it comes to underwriting a fintech, obviously. One of the key risks is that the company uses the funds for something else than what they were intended to be used for, and this is why they put risk mitigation measures in place, such as access to the bank account, visibility to the bank account, visibility to chargebacks at any point in time, and also covenants such as they need to maintain a certain chargeback ratio, they need to maintain a certain minimum runway or certain minimal debt to equity ratio. So these are the risk mitigations that are being put in place. We don't really do it ourselves, but we leverage third-party experts to provide these services.
Institutions.
Yeah.
And how are you planning to scale your products and service offerings to meet the growing demand?
Yeah, so I think this is why we are very excited about the launch of the credit vaults. So far, we really had a little bit of a focus on just those trading firms, mainly crypto native trading firms, and with the launch of credit vaults on Avalanche, we're really starting to tackle the wider sort of alternative lending market, where we're focusing on all types of companies, initially mainly fintechs. Something that we also think is a very interesting sector is maybe the Web 2.5 companies. So they are touching the cryptocurrency industry by working with exchanges, for example. But at the same time, they are actually usually regular sort of companies that are leveraging maybe stable coins for settlement, etc. We realize that those companies are often, I would say easier to work with, and more open to DeFi opportunities, simply because they already have incorporated, for example, stable coins into their business models and business processes. So working with these type of companies is usually a very good first steps. Also, it is kind of good that very often these companies already have some sort of presence in the crypto industry. So some of the more crypto native lenders, they might be familiar with those companies, or maybe they can understand the business models of those companies better than something that is completely unrelated, such as emerging markets, private credit, which is very different and far off from, I would say, the typical crypto native companies. Yeah.
Well, since Clearpool has been a pioneer in this space for a while, can you share a bit more about what challenges have you encountered along the way and how did you overcome them?
Yeah, so I mean the last couple of years were definitely not the easiest one for the credit space, right? So we actually just launched maybe 1 month before the whole sort of Terra Luna collapse, and then the subsequent 3AC collapse, and then obviously later there was FTX, Alameda, and so I would say the whole industry in the credit space was obviously impacted big times by some really large defaults, and as a result, it was obviously that represented a major difficulty in finding lenders for any sort of credit opportunities, especially involving trading firms. So I think ultimately probably those things did lead to some rethinking of the way that private credit was being done. The credit risk assessments have been done in the industry, and I think overall they definitely led to some positive changes, I would say. So I think on our side, or in general, even though this happened at the very beginning, so we had to sort of do it from the start, but we were a lot more demanding in terms of any sort of credit risk assessment that was being done. Also via our partner Fedora, that I think they had a very rigorous risk assessment procedure in place, and that was I think welcomed obviously by us and also by other lenders. I think in general, DeFi lending or DeFi credit, obviously not everything has been done the best possible ways. There have also been defaults, but overall I think overall I think DeFi credit has been performing a lot better than maybe centralized lending. But yeah, I think a lot of lessons learned from these difficult times. I think that was one of the biggest challenges we faced. Now, another new challenge I would say is right now I think yields are very competitive within DeFi.
Yeah.
Right? You have yields are very competitive, and a lot of players. Fixed income is generally not the easiest space to raise liquidity. And I think there one of the lessons we learned, we just had to sort of like find new opportunities, find new borrower profiles, venture into new products. As we mentioned, now we have these fintech loans characterized by very short repayments and high liquidity, and we realized that those are initiatives that are very welcome by the market. So we had to sort of like redefine ourselves, and also redefine a little bit what is being done in the industry in order to overcome these challenges. Because yes, there's a lot of other interesting yield opportunities that we're competing with right now.
Yeah, so many DeFi protocols popping up, right?
Yeah, especially obviously the ones with that haven't launched a token yet. There's points programs. There's all these different things, and frankly speaking, there's a lot of high yield at least in the market. But we want to really just differentiate ourselves by doing what we do best and doing this the best possible way. Maybe we can't guarantee the highest yields in the market, but we are a player that's been around for a lot, that has proven themselves, and that has always been delivering, I would say, sustainable, significant yields.
Yeah. Can you share some alpha leaks that the audience can keep an eye out for Clearpool for this year?
Yeah, so I think obviously everyone is very excited about RWA right now because there have been some big names that recently entered the space, and I can only confirm that there has really been a drastically increased interest from some of those large TradFi institutions that a few years back we were only dreaming of talking to, and I can't really confirm anything yet, but we are actively in talks with some of those large institutions to be to collaborate on something with Clearpool.
Damn, so you're going to be onboarding more Wall Street giants.
I mean, we hope that we're going to be
on-chain Wall Street aggregator.
More large institutions in the place, and I think that's definitely going to be the theme this year.
So, looking into the future, how do you envision Clearpool's credit vaults redefining the landscape of DeFi? Yeah,
so we're excited that with the credit vaults we can really venture into more than just trading firms, right? I think we want Clearpool to become the go-to credit marketplace for DeFi, for all type of lending opportunities. So we just started, as I mentioned, right, with these fintech opportunities. We're moving now into other interesting opportunities. Counterparties might be even DeFi protocols. Counterparties might be other type of borrowers such as prime brokers or miners for that matter. So we really envision to have a marketplace touching on all the different opportunities. And overall we think that credit is still very, very unexplored area in DeFi. It's a little bit, it is not fully decentralized. It's not fully permissionless. It does involve some, centralized pieces. There's a bit of compliance involved, legal agreements involved. And I guess it is, relatively hard to do it right. But we do believe that this is a huge market. And we do believe that, DeFi can actually improve and make the value proposition better. And this is why we're excited with credit vaults. We think this is the first step in the right direction. We want to have this type of opportunities, and we want to give it a little bit more of a DeFi feel. The DeFi field is, high liquidity, payment that allows lenders to withdraw relatively quickly, borrowers to, attract capital fast. And at that time, we really think DeFi credit is going to flourish once the value proposition is better than what we have in the traditional lending world. And we hope that we can contribute to this. No, we're very excited about this opportunity.
Yeah, so that's awesome. So you would be like the middle person that helps in bringing the Wall Street and institutions on chain. All right, thank you so much, Jakob, for your time today. So much alpha. So stay tuned, guys, for what's coming up for Clearpool. and stay tuned and subscribe for more Alpha Leads. Thank you so much for tuning in.
Thank you.
Thank you.